All right, so now it's welcome to what is ESG investing. And before I even share the screen, I was going to share the tidbit that most of you might know about why I'm excited about giving this presentation. So since 2007, I've been in the financial services industry, worked for the big firms, worked for a local firm, but broke out on my own January of 2020. One reason is because I found that financial services tended to cater toward the older, rich, white males, and I wanted to help the other 99% to be able to do financial planning. Hi, Christine. Glad you could join us. So that was my first inspiration, was to help people that I felt like were not getting the attention they deserved. But the second reason was to focus on ESG investing and to plant my flag solidly that I believe in this type of investing. I think that it has a positive future, and I think data is even showing that that it is the way to go, and that it's even a way to encourage or put pressure, if you will, on companies to be good stewards of the environment, to treat people right, and to celebrate diversity and listen to social causes. Because if we can talk and we can basically vote with our money, and money can put a pressure on companies. And so if we invest in companies that follow these values that we all share in mass, we're going to start affecting change. And I have a strong belief in that. All right, so now I'm going to go through starting the presentation. I'm going to zip through all these slides that I have. Then if we could do questions at the end. And I'm not sure if I can mute everyone, but if you could, let's see, it looks like I can mute the couple people that weren't muted. And then I'll invite you to unmute at the end of the presentation and we'll have an open discussion. Okay, now I'm going to go through a few steps here. And I know you get to see my strange grid, but I seem to have to do it that way to toggle back to start. All right, wonderful. So this is what is ESG investing? To start off with, what do the three letters stand for? So what ESG stands for is environmental, social, governance. Those are the three words. And in the past, it's been called different things. You may have heard it called green investing or sustainable investing or socially responsible investing. Throughout the years, it's gone through different variations of names. And I'll tell you, there have also been different focuses throughout the years. So like a green fund may have only cared about environmental focus from a company. And those tended to maybe just be companies that produced solar panels or wind farms. But as the years have gone by, the firms that make products that are considered ESG, and then also the screening services, have expanded this to not just be environmental, but to bring in these social and governance items as well. So environmental, social, and governance criteria are a set of standards for a company's operations that socially conscious investors use to screen potential investments. And that's a key thing, is that it's a type of screening. So I've heard some people worry that if they do an ESG investment, that means it's some specialty little bitty company that is, like I said, only producing solar panels. And that's not true. ESG means they're looking at huge companies, Apple, Microsoft, Google, and various other companies, even oil companies that if they do meet these criteria that the screeners outline, they can be considered a good ESG investment. Okay, and now I skipped ahead with myself about also, these have also been known as sustainable investing, responsible investing, impact investing, or social responsible. All right, so let's go into the three different categories and dig a little deeper. So the environmental criteria consider how a company performs as a steward of nature, which this could mean that they are exploring alternative energy sources. They might not make the windmills or the wind turbines, but they might be looking at utilizing that type of energy. Then how are their carbon emissions? Are they polluting? Then I show like the logging, and because of the paper towels they make, is it causing deforestation? Then a little turtle down there caught in a net, to make sure that they're being good stewards of the ocean and water sources. And then with recycling, that they are good with their waste management and how they do dispose of garbage, and do they recycle, things like that. And I think logically most of us know probably the environmental screenings. The social screen gets a little interesting. So social criteria examine how the companies manage relationships with employees, suppliers, customers, and the community where they operate. So let's look at some examples of that. That could be customer satisfaction. Do they get a lot of complaints, a lot of recalls, where you think about Volvo and the scandal that happened with them, and that they were cutting corners? It could be data protection and privacy. And that's always something that we hear in the news of, that they get hacked and our data gets used. And then gender and diversity fall under this, where there's a lot of social movement about this, and that we respect LGBTQ rights, and that Black Lives Matter and other social justice issues, and how are companies responding to that. It could also be about employee engagement. Are the employees that work there satisfied and happy? Community relations. So, do they sponsor events in the community? Do they care about what's going on around them and how they're impacting the community where they have businesses located? And then it also comes into human rights and labor standards. I know, Amazon was big in the news about when one area was trying to unionize, and they were not happy about that. So that could have possibly dinged their ESG rating a tad. Governance. Okay, governance deals with a company's leadership, executive pay, audits, internal controls, and shareholder rights. This gets a little more interesting. And when I think of what I see as the most important with this, is that their governance is diverse, and that it's not just a groupthink of all white men, and that they're bringing into their board of directors and their C-suites, the CFOs, the CEOs, people of color, females, other diversity issues. So that's a big thing with me. But it also gets into bribery and corruption, and have the companies been audited and found to have some unscrupulous practices, or perhaps lobbying and political contributions, which is getting interesting in the news about the companies that I feel are using their lobbying and contribution dollars to push for social change. And so in that case, they might get a positive mark on the ESG screens, versus where if they funnel political contributions to try to squash some of the rights of the people that work for them or around them? Have they had a lot of whistleblower things that have happened? And then also with the CEO compensation, is it reasonable or is it just outlandish? Which I think a lot of us think, oh, all of them are outlandish. But there have been a few strides in some companies about that. Okay, so that's the E, the S, and the G, environment, social, governance. So the popularity of ESG investing has grown a lot in recent years. And what it is that investors have shown an interest in putting their money where their values are. The most popular ways to invest with companies that are screened well with ESG is through mutual funds and exchange traded funds. And I use exchange traded funds with the majority of my clients. And so you don't have to necessarily screen every single stock that you have in your portfolio. You can, and I do that as well, along with money managers that I use. But what's nice is with these exchange traded funds, they're all bundled together. So you know they didn't even make it into the mutual fund or into the exchange traded fund unless they passed this screen. And then depending on the financial product, it's how often they do get screened on whether they get to stay in there or not. So with the popularity, here's some numbers to prove how it's gaining ground. So ESG funds captured $51.1 billion of net new money from investors last year in 2020. And that's a new record. And it's more than double than what was put into these types of funds in 2019. And that's according to Morningstar, and they are a wonderful company about tracking the movement of where investors are putting new money. And climate change is a big focus for the new president, which could further boost ESG funds. I'm not making any kind of promises about that. However, I don't think it's going to hurt. So the more as a government that we focus on environmental standards, I think that more companies will realize they need to start following them. Okay, ESG criteria. So it's to invest in companies that score highly on the environmental and societal responsibility scales as determined by third-party research groups. And I think this is key. So it's not self-reporting. I recently had a conversation with someone about the FDA, the Federal Drug Administration, and that when someone wants to get FDA approval, they actually do their own studies. They pay for these studies to be done and then presented to the FDA. The FDA doesn't do the study. And so I just think it's good that there are these third-party research groups that are putting the criteria together so that then it's not Microsoft saying, oh, yes, we're great with ESG. See, we've produced this report. Instead, it is done by a third party that I'll show you. And there are many different research groups. I'm just going to show you one. I liked this quote that at its core, ESG investing is about influencing positive changes in our society by being a better investor. And that goes to what I said earlier about we can affect social change by where we put our money. Okay, so one of the screening tools that are used, the company is MSCI, and this is the tool that I use. And I am showing you an example of when I entered in Microsoft as a company to see how they scored. And Microsoft actually got a AAA rating, which is the best rating for MSCI. And if you can see at the bottom, it goes all the way from a AAA down to CCC, which would be the worst rating. And if we have time, I actually have this screening tool up on my computer where we could play around and put in some different company names. Okay, now I want to explain a little bit about how the screening works because this gets confusing to people. And again, they think that to make it into an ESG fund, that it needs to be a specialty type company, and that's not true. So what happens is you start with the S&P 500, and maybe you guys have heard of that. So Standard and Poor's 500 are the 500 stocks that are tracked by the index called the S&P 500, and it's what we see reported on the news. And that it's up 1%, it's down 2%, and it moves daily, and it's a composite of all these 500 companies and how they're doing. So I tried to do a little bit of an example of all these different companies, but I was not going to put 500 of these little buildings on there. But what ESG wants to do then is screen through the S&P 500 down to an environmental social governance exchange traded fund is what I'm using in this example. So what will happen is that some of these companies will get screened out. They'll be rated triple C. That's not good enough to meet our criteria for our fund. And so then it narrows it down. And let's just say, for example, the top 100 of the S&P 500. Now, then this ESG exchange traded fund would be called something like a large cap United States fund, but it would have ESG somewhere in the name. So the fund I use is the Vanguard ESG US Stock ETF. And I know that those are so many acronyms and lots of words, but this screening can be done on all sorts of different universes. So you might take the Russell 2000 to screen down to find the best ESG small cap performers, or it might do international or bonds. So it doesn't have to be stocks. They also do it with bonds or real estate investing. And I'm sure you guys get the idea. But what's nice then is somebody else is doing that screening to then bring down that universe to the companies that score well on the ESG front. There's talk that I've heard through the years that if you are going to invest in these types of funds, you are going to lose some performance. And there's a price to pay for being a good steward. And I believe we're turning a corner with that. This here on the screen is a chart that the blue line is actually the large cap US fund that is an ESG fund that I use. And I had it side by side with the S&P 500 benchmark. So if 1 year ago, as of March 31st, a year ago, you would have had $10,000 that you invested in both the ESG fund and the S&P 500, the ESG fund would have slightly beat your generic investment. Now, I have to say, past performance does not guarantee future results. This could all change next year, but I at least wanted to show you that just by investing in ESG funds, it doesn't necessarily mean that you're going to forego performance. Okay, so the evidence is compelling. Sustainable investing can be a clear win, both for the investors and the companies. And this quote says, we call this doing well while doing good. And sometimes I say, you do good doing good and make it simple like that. All right, so that was all I had for the presentation.